All right, it's the summer, and that means it's a slower market for traders. How should you approach a slow summer market? I'm going to tell you this week, and then I will do my regular weekly market analysis. We'll look at the stock markets, the crypto markets, the commodity markets, and even the US dollar market. And then we will look at the day trade of the week on KXIN, a good trade in a slow summer market. And finally, we'll do a market scan in search of some longer term opportunities. That's all coming up. August has been a slow trading month. It's not out of the ordinary for the summer to be slower, but I would say that this year it's been abnormally slow. And I think that is the echo effect of the really dramatic run that we had higher early in the year when you had the meme stocks moving up so well, the small cap stocks moving up so well. Many of those have collapsed or fallen back a lot. And I think a lot of people are tied up in those names and really maybe don't even have money to trade with. So we've noticed that there's been a real slowdown. Now, every day, there are still a few stocks worth trading. You just have to have the patience to know what to look for and to actually do that. When you are in a slower summer market, there's two things you have to understand. First is beta. What is beta? Beta is the correlation of a stock to the overall market. If the overall market is going sideways, then the overall market is not helping individual stocks. And certainly that is what we have seen in the small cap sector and many of the market sectors, which have been really quiet. Then there's the alpha component. That is the movement in stock price that is related to the company itself. So you can have a slow summer market, but if a gold mining company announces that they have found a new deposit of gold, that stock is going to move up dramatically. Or if a biotech stock announces that they have a new cure for some disease, well, that stock is going to go up even if the biotech sector is not all that strong. So we have to always consider alpha and beta. In a slow market, you want to seek out the strong market sectors, the beta component, and trade those, or you want to seek out the alpha stocks, which are trading independent of the market. Now, the footprint of alpha stocks is abnormal volume. So I'm going to show you some charts in a moment. We're going to look at a stock that was behaving abnormally and also in a strong sector. So it had alpha and beta. And then I'm going to show you a stock that really only had alpha, but it was able to do very well last week because it had that alpha component. It was trading on its own story. So let's take a look at a few charts. First of all, this is the US Software Index chart. So this is a sector of the market related to US software companies. So something like Microsoft. And you can see it's in a nice upward trend and it was breaking out last week. The stock scores are in the right place with that green sentiment stock score line above 60. Okay, so there we know that the beta component is positive. If you were to go look at the chart of the gold sector, you would see that it's not a good looking chart, and therefore the beta component for gold stocks is negative. So we know that software stocks are doing well. So then we jump into the Microsoft chart from Friday. And this is just a very short-term chart, a 2-day, 2-minute chart. And what you can see on Microsoft is that it was trading strong volume on Friday. That tells us that not only does it have the beta component in its favor, but it also has the alpha component in its favor, because we know that when stocks trade abnormally with abnormal volume, they have alpha. And we can see that on Friday morning, Microsoft gapped up on the open, and then it went sideways for about 10 minutes and then broke out. And that is a good day trader buy signal. You can see the stock made a nice press higher. Now you may say, well, I don't really like buying $300 stocks. That's fine. You can leverage stocks like Microsoft with call options, and so you don't have to actually take a huge dollar position because you can use the leverage of options. Generally speaking, I prefer to trade the stocks, but on some of these larger cap stocks where they have very liquid, actively traded options, look for an in-the-money, short-dated call option to take advantage of these short-term moves. As a percentage basis, you're going to make much more on the option than you would on the stock, because the stock went up 2 or 3%, which for Microsoft is quite a big move. Now let's take a look at an alpha stock from Friday, or really late this past week. So this company, DATS, is a new listing. It started trading maybe a week or two ago. But what I want everyone to notice on this 5-day, 5-minute chart is the abnormal break right here with strong volume. The stock was boring, trading sideways, was building optimism because we had a rising bottom, and then came alive with abnormal activity late in the day on Thursday, and that powered it higher into Friday's close. And there we have a move from $4.60 to $6.20, all powered by that company. That stock it's a technology stock that has some blockchain elements to it, but that sector of the market wasn't particularly strong. That stock was not moving up because the market was moving up. This stock was moving up because investors like that story. It was trading on its own story, and that's the alpha component. So in the summer, either trade those few strong sectors. For example, right now the software sector is strong, or trade the alpha stocks, those that are trading abnormal volume, or better yet, find stocks that have both things in their favor, the alpha and the beta component. All right, now let's get into this week's market analysis, starting off with the US markets. And this is the short-term chart of the S&P. You can see we had some volatility this past week. We had a break of this very short-term upward trend. This is the 30-day, 60-minute chart. So on a very short-term basis, we've broken down a little bit of nervousness. At the end of the week, we managed to rally back, but we still have not, fixed the damage from the breakdown early in the week. So we want to be a little bit cautious short-term with the large cap stocks. Now long-term, those large cap stocks are in a nice upward trend, so we remain bullish long-term. On the NASDAQ, it has been going sideways for, I would say, the last month or two, and the longer term upward trend is still intact. So it's a good market, but it's a little quiet. The technology sector still has optimism long term, but short term looks like investors are a bit bored. Now the Russell 2000, which represents small cap stocks, have been in that boring sideways pattern for 1, 2, 3, 4, 5, 6, almost 7 months. And that has made shorter term trading, swing trading, day trading on those smaller cap stocks more difficult because the beta component, the overall market, hasn't been helping. And so to make money in those lower price stocks right now, you really have to identify those that are trading with abnormal volume and have signs of good chart patterns that can propel them higher. Now we see that the Russell sold off for most of this week. It came into support and it bounced off of support on Friday. So I'm optimistic that we'll see a little bit of a bounce back next week. But until we can break out of this long-term sideways range, it's going to be a little boring in those small cap stocks. Canadian markets had a little bit of weakness on the Canadian side short term as well. You can see the upward trend line switch to a little bit of a downward trend. We managed to break that short-term downward trend at the end of the week on Friday, but volume very light. So we'll see if that can materialize into more of a recovery. I think we have to be a little bit cautious with Canadian stocks short term as well. Long term, upward trend intact. Therefore, we remain bullish long term. On the TSX Venture, which is the microcap stocks in Canada, you have a negative chart. You have falling tops, which is pessimism, and you recently broke down from that falling top, and that indicates this market more likely to go lower than higher. So the speculative stocks in Canada that sit on that TSX Venture, so a lot of the mining stocks, the cannabis stocks, some of the junior oil and gas stocks, they're not looking all that good, at least in terms of the beta component. The overall market is slow for those microcap stocks. Not atypical for the summer. Typically, this market bases out and starts to move up September, October. So we're in the late stages of the dead period. We should start to see it improve in the fall. Now let's move on to the currency market. And the US dollar making an important move this week as it breaks out from this little cup and handle pattern. So here's your cup, here's your handle, breaking out from that. Volume not particularly strong, but it is a good reversal pattern. So you will know if you've been watching these videos for a while that I was optimistic about the US dollar when it broke its downward trend line. It retested the lows, and now it's starting to build optimism with that rising bottom and a break higher from a rising bottom. So I do think that the US dollar more likely to go higher than lower in the weeks and months ahead. And that is going to be harmful for commodities because commodities, for the most part, are priced in US dollars. So things like oil and gold, this is a negative signal for those. And we can see when we look at the commodity charts, actually we'll come to the commodities in just a moment. Let's first talk about crypto. Bitcoin continues to have some strength. We've been up for about 4 weeks in a row. However, we have not yet managed to break the downward trend line. Bitcoin was oversold. It's come back from being oversold. Now the question is, does it break the downward trend line or does it roll over and retest the lows? I don't have the answer. More than likely, I would say 60% chance is we roll over and retest the lows. There is perhaps a 40% chance that we can break that downward trend line. So weigh those options as you trade Bitcoin. Ethereum, a little better chart actually because it's broken that downward trend line and it's trying to break higher from a rising bottom. It hasn't gotten through the resistance yet, but it doesn't face that longer term downward trend that Bitcoin has. I think they're both going to move similar to one another. And so I would still remain relatively cautious on Ethereum as well. All right, moving on to commodities now. So that strong US dollar, what's the effect? Well, you can see that gold has been in this downward sloping pattern. This is a downward sloping channel. Lots of volatility in that channel. We're getting up near the top of it again, so good chance we roll over and move lower, especially if the US dollar continues to strengthen. Now, the strengthening in the US dollar really shows itself in oil because we have now broken this shorter term upward trend. We're still holding this longer term upward trend, but I think there's a very good chance oil pulls back into that upward trend line. So in the weeks ahead, I would expect some more weakness in oil. And finally, the fear chart. There's really no fear in the market. We had a little bit of a bump early this week, but it gave back a lot of that move on the VXX, which is our fear chart. All right, so my ratings then, bullish long-term for both US and Canadian stocks, but short-term, I've lowered my rating to neutral. There's been some volatility. I think we need to be a little bit cautious short-term. Gold, neutral on both time frames. Oil, neutral long-term and bearish short-term. So slow summer markets make it necessary to focus on the strong sectors, or you want to trade those super alpha stocks, which are the ones trading very abnormal volume. What is essential in the summer is to be patient for the good trades to come to you. Don't try to push it. Don't work harder to find what is ultimately lousy trades. The good trades are obvious and they will show themselves, but you have to be patient and wait for them to come and be fussy. Commodities have been hurt by the rising US dollar. Crypto is showing some strength, but still fighting that downward trend line. So remain somewhat pessimistic about crypto. As I said, fear is relatively low. All right, now let's get into the day trade of the week. Every day on Stockscores Active Live, we have a service where we get an algorithm that goes through the market looking for stocks that trade with abnormal activity, because we know that that is the clue for alpha. We want to focus on trading those alpha stocks. Now, the best ones are the ones that also have beta. So when Microsoft gives us alpha characteristics in the form of an action candle and it's in a strong market sector, well, that's great. Other stocks will show alpha only. They may not be in a good sector. That's not as good a quality, but sometimes those can make big moves as well. You just have to be really fussy about the chart pattern. So what I like about this week's day trade of the week is it had a really nice pattern. We saw the action candle at just after 1 o'clock, 1:04 on Friday, but that action candle, and this is on the 2-minute chart, broke out from an ascending triangle. You can see the spike of volume. You can see that our price indication jumped higher. So there's those evidence or those signs of abnormal activity. Someone was excited about this company for some reason, and it broke out of a predictive pattern. So although this company may not have the beta component, it was showing good signs of alpha. Now, it didn't make a huge move. It went up as much as 2.5 times its risk and finished the day at about 1 times its risk. For every $100 of risk, you would buy 900 shares, which was a $3,078 position. You can margin these things 3 to 1, so the actual capital required was only $1,026, and this only made 1 times risk, which meant a $100 gain for roughly $1,000 of capital. However, that's still a 10% return in a few hours, and in a slow summer market, these are the kind of grinder trades that I'm happy with. I'm not necessarily expecting the big winners like we had early in this year because the market is quieter. And so the beta component isn't helping. And so we grind out smaller profit trades. As long as you are consistent, and by consistent meaning you're fussy and patient, waiting for those good trades to come along, you can grind out a few RR, reward for risk, every day. All right, now let's jump over to the Stockscores market scan. And I'm going to just show a little way to do a longer term scan because I know not everyone is a day trader. And so one of the scans that you can run each weekend for Stockscores members is what we call the Stockscores Simple Weekly. What we have to do with this scan is first set our chart to a 3-year weekly chart. So we go down to interval, change that to weekly, go to the time look back period, change this to 3 years, and then go down to the bottom, click on Create Chart. Now I've set my default chart to a 3-year weekly. Then I can go into the market scan and run the Stockscores Simple Weekly Scan. So this is an investor scan available to investor level members or higher, so active trader members as well. And it's going to go through all the stocks that basically had a good week, and then we can inspect their charts to see if they are breaking from a predictive pattern. What is a predictive pattern? A stock breaking from an ascending triangle, like we saw in that day trader chart, would be a good example. Stocks that are breaking from sideways trading, boring, no action, sideways trading. So for example, this stock broke through resistance from 2 or 3 months of sideways trading back there, and since then it's been moving higher. So that's what we're trying to find this week. We'll go through all of these Canadian charts, see if there's anything. I run this scan every weekend for both the US and Canadian markets. Some weeks I find 4 or 5 that look great. Some weeks I find 0. It really just depends on what sort of a week it was. This stock is breaking out of this little short-term range right here, which is pretty good. However, the problem is it's still got resistance at 45 from back in late 2019, and that's going to limit the upside. So I don't actually love that. ATS Automation made a breakout early in the year. You can see it right there. It's been doing well since then, but it's not making a break from low volatility now, so that's not good enough. Fortis bumping on the door of resistance, but I don't think it's great yet. Something to keep an eye on though. EMA also bumping on the door of resistance, but until it can break out from low volatility, I wouldn't do anything there. And we got a couple more pages to look at here. I'm going to go through these a little quicker. I'll pause if I see something that is what I'm looking for. And like here, for example, there's boring sideways trading and then the abnormal break there. That's what leads to the big moves. It is breaking to new highs right now, but it is not breaking from low volatility, not breaking from sideways trading. And so therefore it's not great. National Bank, it made a great perfect pattern really back here in, what was that, March, when it had this sideways trading resistance, broke out on the weekly at $80. Now it's pushing $100, 25% return in maybe 6 months. So that's the sort of pattern that I'm trying to find today, looking through these weekly charts. And then of course you could run this on the US side. We'll just do the Canadian side today. I did the Canadian side mostly because the list is a little shorter, so it won't take us as long to go through them all. And although I don't see anything great to buy this week in terms of longer term trades, there's some good lessons in the charts that we saw, and hopefully you've learned something from that. If you have learned something from this video, enjoyed the content, I'd appreciate it if you'd click on the like button. It helps with the YouTube algorithm. Subscribe to the channel if you are not already. And most importantly, next week, trade well.